Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Amazon shares are sinking about 4% today after the company reported earnings last night. For more on the report and what's next, let's welcome in Alexis Brown Roberts, COO and Portfolio Manager at Alexis Investment Partners. Alexis, great to have you here with us. Thanks so much for joining us.
It's so great to be here. Thanks for having me on, Caroline.
All right, so Amazon shares, as I said, down about 4%, but still only less than 6% away from all-time highs. What is it, do you think, that has investors so downbeat following that report?
I mean, really what you're hearing is that it's really that guidance going for Q1 of this year. That's what had people kind of nervous about this report. I mean, yes, technically they came a hair under for their cloud services, but really it's that they're looking forward for Q1 2025. They projected about like a 5 to 9% revenue, which is one of their lowest ever, I believe, projections of revenue growth. And this was really citing just foreign exchange cost worries as they see the U.S. dollar strengthening.
So do you walk away, or did you walk away as downbeat as investors appear today based on the numbers?
I really didn't. I mean, I think notably Amazon is not just a Mag 7 stock, but it's also a retail juggernaut and have this huge margins due to both their retail business, which is obviously huge, as well as their advertising business, which at this point is like $17 billion. And why this is really unique for Amazon is because it puts them in a position where they can continue firing on all cylinders, which is really how they tend to make a lot of money, and notably are investing that and are expecting to invest about $100 million into CapEx for 2025, focused mainly on AI, which, as I'm sure you've been talking to everyone about, AI is a huge deal right now.
Yeah, and $100 billion, even more than we were expecting there. So pretty steep number there. So we're not seeing a huge dip today. As I said, still less than 6% away from all-time highs, but we are seeing a 4% dip. So if you didn't walk away as downbeat, would you buy this dip following earnings?
So personally, we don't own Amazon outright. We feel like we have plenty of exposure there just by owning broad ETFs. So we own like a VUG, which is a growth fund. We own QQQ. Even owning the SPY, you're going to have plenty of exposure to Amazon for our taste. And what we would rather do is buy into the areas of your portfolio that are more underrepresented right now. So for us, like probably a lot of investors out there, an underrepresented portion of our portfolio has been in small caps. So recently we've bought into profitable small caps, so an S&P 600 fund. And we would rather just play this in a more diversified way as we're looking at continued volatility and perhaps some changing leadership through this year.
Okay, so we have seen tech underperform in terms of sector-wise, in terms of the S&P 500 sectors this year. It's the only negative sector so far. I was going to ask if you think that tech can stage a turnaround. Obviously, there are winners. We were just talking about Meta, for example, seeing a really impressive, year-to-date so far run. But do you expect this rotation out of tech to continue then if you're looking to put money elsewhere?
I mean, we'll have to wait and see, but we wouldn't be surprised by that. I think technology is still going to be a huge story, but it's not the only story out there. And once again, as we're looking towards a more volatile year and recognizing how high valuations are right now, particularly with tech and with how big tech is in these broader ETFs in the markets in general right now, it wouldn't be surprising to us to see some rotating leadership, and we just wouldn't want to get stuck overly focusing in one area. That doesn't mean we've given up on tech at all. I mean, we do still love our Apples, our Microsofts. We still do like that dividend, that U.S. growth, but we wouldn't want to just be focused there.
Okay, but what does that shift and that rotation out of some of these big names tell you about the overall market? Does it present risk as well?
It does present risk, but it may also mean that you're diversifying away from risk. And I think just as important as the fact that we're rotating away from tech, I mean, that may just be a recognition of the valuations of those companies, as well as the fact that a lot of that growth has been stimulated by AI. But the really exciting part of AI would be a boost in productivity, more similar to like what we saw with the internet in the 90s. And so we're going to see a lot of other companies and a lot of other sectors really benefit from this new technology. Even last year, you started to see names like Home Depot and Walmart really benefit by starting to implement AI into their business practices. So it may also just be a recognition that this is going to be a lot broader of a benefit than just for tech. Also, Caroline, it's notable to note that there's about $7 billion of just money market funds right now. And a lot of that is cash stuck on the sidelines that, hey, investors were happy earning like 5% or now about 4%. But as we see interest rates neutralized from here, and perhaps by the end of the year getting towards 3.5%, that money is probably going to go into other areas. And while it may be some of it going into bonds, you'll probably see also a lot of that go into the markets, and that should be a headwind. I wouldn't want to count out the market when we are in this current bull uptrend, even if there's going to be quite a bit of volatility.
Okay. And you mentioned that you like small caps, of course, in terms of diversification. What about international stocks? Because in reality, those are actually outperforming the U.S. right now in 2025.
Yeah, we personally aren't going there. We just don't see a reason to. With you talk about risk and headwinds here. I mean, there are going to be a lot of tariffs and other factors there that we just don't really see a reason to go there. We are more domestically focused right now, and we would continue to put our diversification into domestic, not betting against the U.S.
Okay. All right. Alexis Brown Roberts, COO and Portfolio Manager at Alexis Investment Partners. Thank you so much for sharing your picks.